Hello, Alvin Brown. Another one of my offer compromise talks. I find that there's huge interest in people that come to my webpage looking for offer compromise information. So I'm just expanding what I've done a little bit. I'm talking to you, to the camera, as if you're a client sitting in front of my desk, and this is the tone. All of this is ad hoc, all of this is unrehearsed, and I've been getting really good feedback on that. People feel comfortable talking to a real person who's not practiced and not a salesman. But with regard on that last point, though, we don't accept any clients for an offer of compromise unless they qualify for an offer of compromise, and you have to be careful about other places. You say, hey, yeah, you qualify, pennies on a dollar, but to be serious, it's all based on reasonable collection potential. I had a call today. I talked to somebody and did not accept him as a client. Had a $60,000 tax debt, had assets in excess of $60,000. They want to get rid of the tax lien. And no way, you're not going to qualify. I don't believe the stuff you listen to on TV. The internal review manual, let's see, I'm looking at now. You can go to the IRS webpage, www.gov. There's on the top site map. You go to sites, it will bring up, just going back, it'll bring up the internal review manual, parts 1, 2, 3, 4, 5, 6, and so on. And part 5 is collection, and under that there's the offer and compromise manual. Manual is important because it has legislative impact. The IRS is not friendly to people. They will take advantage of some people, and the reason to know something about the manual is because you want to keep them honest. Very often, if they can push you around, and they will. They'll take advantage of you. So I just selected, just for a quick discussion, as an example, the part of the offer compromise manual, section 5, is 5.8.5. It deals with financial analysis because it is important. And this manual does hit the highlights. It says that these settlements are based on reasonable collection potential, and just looking through, they look at equity and assets, and net realizable. Here's something interesting. Net realizable equity and assets. They will discount hard assets by 25%, and that's the manual says, but the statute and the regulations have the facts and circumstances tested it. In this economy, because of the value of real estate, the difficulty of selling real estate, I think it's possible to ask for a discount of greater than 25%. It has some rules in here for jointly held property. Here's an issue: assets held by others is transferees, nominees, or alter egos. Because the IRS looks at reasonable collection potential, a lot of people think, well, let's just move the assets out of my name and put it to somebody else's name, my cousin Johnny or something, and then I'll clean off my balance sheet. I don't own the asset. We'll transfer the house a year or two from now. Who transfer it back to me? Well, the IRS will know. I mean, they do track real estate. They'll know it's been transferred. They could treat that as a fraudulent transfer, and even if you gave it away, they can deem it back to you and treat it as if you still owned it, even with the title someplace else. They will often treat Johnny, the cousin, as your alter ego, and that's another way they can bring it in to that. Here's cash, securities, life insurance is an example. They bring in as assets retirement or profit sharing plans and the equity in those plans. Furniture, fixtures, personal effects. There is an exclusion presently of personal effects of somewhere around $8,400, a little bit more than that I think now. And also for tools, which run around $4,000. In general, because of those exclusions, very few people have household furniture and clothing and jewelry that exceed that $8,000 exclusion, and the IRS never raises it as an issue. And the reality of it is, if you put all of your household furniture and clothing onto the sidewalk and try to sell it at a quick sale, you're not going to get a lot for it. And they don't go to your houses, they don't value it. Certainly you want to be realistic. I mean, if you've got a famous artist painting, you would want to, that's an asset. Motor vehicles, airplanes, and boats, obviously. You really don't want to own airplanes and boats if you're doing it off for a compromise. I'm not going to accept any client that has equity and assets that exceed their liability, because it won't work. I know that from the get-go. It's not going to work. So what's the sense? I'm not going to submit an offer in compromise unless realistically I know based on assets and income that they're going to qualify for an offer in compromise. So when we get calls, we do screen our clients to see if they do qualify. And we'll let them know, hey, if you don't qualify, then, an installment agreement or full payment. Your client today, some issues and problems, payroll taxes that these know are not being paid, $300,000 tax debt, they're going to pay it. They have assets to do it, and that really is the best way to settle it. You certainly can't get it reduced if you have assets equal to your tax debt. They have assets equal to or in excess of their tax debt. Inventory, machinery, equipment, businesses are going concern. That issue does come up periodically. But look, if you're a one-man show, what's the value of going concern? You have to hire someone to replace you. So a lot of people don't realize, well, you have to make the point to the IRS that in looking at the value of a business as a going concern, that is, what's it worth if you would sell it, that you'd have to replace yourself as the principal, working in that business. And that's here's a section of anticipated assets that I talked in another tape. Future income. This is important. If the offer is to be paid in 5 months or less, they project for the next 48 months. It's a few years ago, they used to use higher multiples, and they really raised some havoc. There was a misinterpretation by the IRS of what the multiple should be, but for 5 years or less, it's 48. I normally do that. I really like to do offers that are that we can pay within the 5-year period. Anyhow, guys, I just wanted to let you know that there is a manual on these things. The whole section that's 5.8 of the Internal Revenue Manual gives you an awful lot. That manual was last edited on 9/23/08. That's probably good for another year. If you have any questions, please call me at 703. Let me give you 888. What's my number? 888-712-7690. 888-712-7690, extension 106 or 111. My email is ab@irstaxattorney.com. Thanks for listening, and I hope I've given you some good information today.